Okay, everyone, let's see what Bitcoin's been up to. Today, we're going to go through any trades that we could have entered over the weekend, as well as what we're looking forward to this week. So let's just quickly retrace and see whether there are any trades that we could have actually entered or any trades that worked out as we planned. It's been quite a while, quite a while. All right, so this was, oh my goodness, Wednesday? Surely not. Surely not. Wednesday? Damn, it's been a while. All right, cool. So we'll go from there. Let's see if we had any plays on Wednesday. So on Wednesday, we had this range that we had set. Okay, cool. Yeah, that makes sense. Yeah, let's see where we are. All right, we had this area that we set up. Okay, and in terms of current Bitcoin price action, I'll show you exactly where that is, so that we can follow track. It might take us a minute just to ascertain exactly where we are, but we'll get there eventually. I think it was this one. Dokes. No, it's not. No, it's annoying. All right. Anyways, so we're here. So this is where we were. I believe Wednesday we were right here. So if we go to Tuesday, Wednesday. Cool. This is Wednesday. All right. So when we look at the setup, this is exactly where we are. So we kind of have to rewind for quite some time. And I'm just going to talk you through the price action, see where we were. So we said we had, obviously, we came out of this range that we had. This is our range here. As you can see, if we go back to the price action, this is our range over here. We had this range that, we flipped market structure. We broke bearishly from the range. We realized we had trend line of liquidity here, curve liquidity here. We had supply and demand zones, and we tagged, I think it was a 10-minute zone. Yes, it was. We tagged this beautiful 10-minute zone. Now, was that a zone that was given in advance? Let's take a quick look. My computer's a bit slow today. All right, so that zone was right here, bang. So that zone, we hit that zone. All right, we had a trade set up there. We hit that zone. That was good. And then not long after, that zone did exactly what it's meant to do. So remember, supply and demand zones are like magnets. They not only draw the price to, what does a magnet do, right? A magnet draws something towards it, and then it repels something away from it. And that's exactly what this demand zone did. It sucked the price in, and then bang, it pushed the price out, leading to that break in the structure. That momentum was enough to flip market structure bullishly. Now, after that flip, we said, all right, well, over here, we're waiting for a nice retracement for that continuation. But we said we have to be careful here because even though we get a continuation, we've still got some obstacles above us. That obstacle looks like a 4-hour supply zone that's confluent with a POC, as well as this internal 15-minute zone there. All right. So we're going to take a look and see. I think we reacted off of both. From, if memory serves me right, we not only reacted off of this 15-minute zone, we also reacted off of this 4-hour zone. So we're going to take a look at this now, see how that played out. All right. So here we go. So what price did, for those of you who are not aware, so price came out as we expected. You can see that it came out as we expected. It retraced, all right, and it very nicely retraced into this 15-minute zone. We can see if you entered a trade there, you'd have been good. All right, 15-minute zone. If you limit ordered that, you would have been fine, but I wouldn't suggest using the limit order. But regardless, we entered a trade off of that 15-minute zone there. We flipped market structure bullishly right around here. We retraced after that flip and we continued up. So very nice trade. So if you did enter that one, if you enter the long from down there, congrats. If you enter the continuation long from here, congrats. We didn't quite get a deep retracement, but we got a retracement nonetheless. All right, so congrats. Big, big, big shout. Now, if you're calling these levels and you're entering these levels successfully, big well done, because it's one thing having a plan, but being able to execute that plan in live market environment is a whole different skill in itself. So if you are catching these trades, even if your hit rate is about 50%, 60%, 40%, that's fine. That's fine. Over the years, it will compound, and over the years, you realize that, hey, listen, I have become one with the charts, and I understand order flow. I understand probability plays, and I can predict what price is likely to do next. All right, and that's the whole idea. It's not just going to come to you overnight. But if you're getting, let's say you have 5 trading days, you have 3 green days, 2 red days, even 2 green days, 3 red days. That's fine. That is fine. All right. Trading is not about the trader who has the highest hit rate. It's not about that. No. In fact, I haven't met a trader who has perhaps 100% hit rate. I've not met a trader like that. But trading is about when you are right. Make sure you're winning big. When you're wrong, make sure you're losing small. That's the whole idea. I like to think of it kind of like, what sport would I liken it to? Kind of like baseball. Baseball. Let's say your strike rate is when the striker actually hits the ball, makes contact with the ball. So obviously the bowler throws multiple balls, and I'm pretty sure professional baseball players, well, the best of the best, the creme de la creme when it comes to baseball players. Obviously the bowlers bowl the balls really fast, and you can see from those videos. But the best strikers, they actually have about a 30-40% hit rate, which means they get paid millions of dollars and millions of pounds a year just to hit the ball 30% of the time. And that 30% of the time when they hit the ball, they make it count. So that's how I like you to think about your hit rate when it comes to trading. How you don't have to have a 100% hit rate. Not all your trades have to be winners, but when they are winners, let them be good winners. So what did Price do? So Price got that nice push off of this 15-minute zone. And then guess where it came to? It rallied up, conjured up the strength, broke market structure there, and reacted off of that 4-hour supply zone, as we can see here. If we drag this across, this is our 4-hour zone. All right. Now, I believe price has rallied down after that. So I don't know why this has stopped here. So we're going to see what price did. Yes, it did. Good. So we got a reaction off this 4-hour zone. In fact, we broke structure off this 4-hour zone. So you could have also entered a trade in that box there. So that's 2 for 2. All right, 2 for 2. That if you're risking, if you're practicing good risk management, that's at least, I would say, at least 5 to 10% of your account. Okay, so if you're trading with a 10, or $100,000 account, that's at least 10K in there in those two trades. All right. So we're just gonna talk through how that transpired, and then we're gonna see what's going on now. So yeah, that was the retracement we talked about. That retracement gave us a nice push. That push reacted off of this 4-hour zone. Now this 4-hour zone broke structure. As you can see, I would have been waiting for that break of structure here from this line that I've drawn here, as you can see. So the moment we start to break from that, that is where we enter the trade. So we came down, bang, we broke down, as we can see. We had a cheeky little retracement, and then we had at least 2 expansion legs down. All right. So I am back testing a few ideas at the moment. And if there are any of you in there, or any of you trading at the moment, listen to this video, who's also on Discord perhaps, feel free to join Discord if you're not already on Discord. But if you've got time and you're looking to do some back testing, I've got a lot on my plate. So I've got a lot of stuff and new strategies I would like to share and run the test on. Okay, some very exciting stuff. As we can see, anyways, here as we break structure, we have 2 legs down, 2 impulses. Impulse number 1, impulse number 2, and then what happens is kind of weird, in my opinion. We flip market structure again bullishly internally. And when I say internally, what I mean by internally is this is our new region. So all of this is internal price action. So we flip market structure again internally, having a nice break of structure here. Okay. So this is where a lot of people would have said, oh, time to get out of this short because it's scary. We flipped market structure. Now, if you did, I don't blame you because there's no reason why some of you might not have been looking at this as a higher high, higher low, higher high, higher low for another higher high to break that zone. However, that 4-hour zone did flip market structure. It did break structure. And if we check that, let's see if we got a break perhaps on the 4-hour. Let's see if we got a break on the 4-hour. Okay, so on the 4-hour, we didn't necessarily get a break. Why? Because the 4-hour high and low is right around here at 94 grand. Okay. But anyways, what price did is a bit weird. It's a bit weird in my opinion. It's a bit weird. But again, price does what it does. And we're not here to tell you, oh, price shouldn't have done that. We're just here to react off of what it actually does. So here we come back up, okay? But why the question is, why the hell did we come back up here? That's actually the question. That's what you have to be thinking. Why didn't we just go, ooh, boo, 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 boo? Why didn't we do that? Well, the reason we came back up here, I haven't looked at this, but it's probably in there. And we're going to investigate that now. So if we go to a lower time frame, let's see if we have any supply or demand zones in there. There's a chance we have a zone in there. So I'm going to use the replay. I'm going to use a bar replay tool. And I'm just going to isolate that region. And we're going to investigate, see what's in there. There's a chance we came back to grab something. So let's just double check. It's not always the case, but there is a chance we came back to grab something. If we go down to the 5 minute, is there anything in there? Okay, so we've got this zone in here. And for those of you who don't know how to choose your supply and demand zones, feel free to hit me up. This is why I do the one-to-one lessons whereby I teach you exactly how to select these zones for yourself. So we're going to test that in a second and see if that was what price came back for. But to save time, I'm also going to drop down to the 3, 2, and 1 minute zone because I want to check to see if we've got anything hiding, anything lurking in there. All right, it's looking unlikely. We're on the 1 minute and I haven't seen much. Okay, we do have that, but I don't think we came all the way back up there. Okay, all right. I think we've got something here. No, that's been mitigated. And in case you're wondering what I'm looking out for, I'm just looking out to see whether we have any gaps here, any bars of inefficiencies that, validates my supply and demand zone. So this is all we've got. This is all we've got. Of course, you could argue that, on the market structure up, we had high, 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 low, high, high. And then internally, if we have our internal market structure, you can say, well, on the way down, you've got, a low, low, lower high. That doesn't, let me check. Nope. Low, low. So we can say that's what we had. Okay, and on some time frame, this is the exact structure. You can check, but I'm not going to do that because I don't have time to do that. So in that case, this becomes the last supply zone. All right, this becomes the last supply zone. I can put that in red. This is the last supply zone before we actually. Sorry, it's a bit rusty. I haven't done a video in 5 days. So I'm a bit rusty. This is the last supply range, all right, before we carried on. So let's see. Perhaps that's what price came back for, and that's why we got a reaction. That 2 minute is too slow, so we're going to accelerate that. And we're just going to see why price reacted there, because it's a bit weird that it reacted there, in my opinion. So what did it come back for? All right, so it burst through this zone, so this wasn't the reason. All right, so that can go. Well, the only reason has to be the fact that we have this here. Okay, so all price has done is come back. It's basically come back for that last supply range. It's come back to mitigate that last supply range. Because think about it, from here all the way down to here, the only real gap we have is here, and this is the gap that we have. I can pop that in a different color, maybe give that a blue. It's just come back to fill those gaps to establish efficient price action again. That will be the only explanation there. Okay. But also, if let's say you were I doubt some of you are, but if you are simply a fib trader, you could have said to yourself, if I take the fib from the high to the low, if I check what the 786 is, yeah, look, it just came right back for 786. I came back for 786 and then banged down. But price was a bit cheeky. It was a bit cheeky. And price loves to do this. For those of you who have been here for a while, Bitcoin, it loves to play these games with us, this market structure games, where it gives us a break, but it's a false break. And I think we had one of those here. Why is that? Because as we can see on the structure on the way up, some of you might have been looking to short this, and I'm sure some of you were. But on the structure on the way up, the price action said we've got higher high, higher low, higher high, higher low, higher high, and then this was the cheeky move. Bang! It momentarily broke structure here. All right. So if you take a look here, you can see that we momentarily broke structure. If we zoom in, we can see that this bear bar, traded below this low. Okay, so that we call that a bearish breaking structure. Yes, it wasn't a convincing one. This is where, at this point, I have to say to myself, well, I need to check on the higher time frames to see if this is still a valid close. So I'm going to drop to the 15, see if that's a close on the 15. Yes, it is. 24. It's less of a close, but still a close. 30. Okay, so on the 30, we no longer have structure here. So we can only really investigate this. We can't even investigate it on the 24. We can only really investigate this up to the 15. And on the 15, it was a close. So this is what I mean. Cheeky from Bitcoin. Why? Because usually when we get a close like this, what do we expect? We expect a retracement for further continuation. And also, Market Cypher was giving us a nice bearish divergence. So if you lost out on that one, listen, it's okay. It happens. It happens. Unfortunately, price came back up for one more impulse, sweeping all of these guys. The guy who shorted there, all right, that bear swept that bear, okay, came back up, and then price decided, you know what, I've grabbed that liquidity, I'm ready to go down. Now I'm going to touch that supply range and I'm going to head down. So what price did is it created more structure, created another high, high, low, high, then it gave us a break. Now let's talk about breaks. Now there are different types of breaks. There's break A, break B, break B, different categories and families of break. Well, trading and price action is kind of common sense. What break do you think is going to work better? This break here, all right, where we had this tiny break compared to this break here. All right, what break do you think is going to work better? Well, obviously this one. All right. So the moment you see a break like this is when you say, yes, this is the key zone. I should be looking for a trade. Now, what I'm trying to drum in your head is the following. Sorry, that sounded a bit aggressive. But what I'm trying to drum in your head is that you don't necessarily have to catch the first drop. You know, you don't always have to be. Listen, in my opinion, this is the most expensive time to enter this trade. Yes, you're going to get a juicy risk to reward, but it's also expensive. Why? Because you are paying more for your trade up here. And you're not paying more in terms of dollar value, but you're paying more in terms of risk. Similar to what happened here. You see what happened here? We got the drop in, we got the break in market structure, but shortly after the break, let's say you enter the short there, aiming for down here maybe. As soon as you entered that, it reversed on you. All right. Why? Because we didn't see follow through. All right. Follow through means successive breaks in market structure. So here we have break structure number one. Not only did we have break structure number one, we have a nice retracement again. So you could have definitely, if you missed that first one, you could have entered here. All right. Then we get break structure number two. Then we get a retracement. Then we get break structure number three. All right. So I kid you not, it's very tough sometimes to enter the trade right here. Sometimes you might want to be the trader that says, sod that first entry. I'm going to wait for further confirmation. I'm going to be the guy that enters the trade here. All right. That's when you start to look at the statistics of what Bitcoin does. That's when you start to back test. Okay, if we're looking at a 45-minute breaks or 4-hour breaks or 15-minute breaks, what's the probability that if we get a counter trend model one or counter trend model two, what's the probability that it's going to give us at least 3 expansion legs, at least 4 expansion legs, at least 5 expansion legs, or 1 expansion legs? Now, if you've got your data and you've got those probabilities in your back pocket, then you can start entering these trades with confidence, saying that even though we've broken structure and I've missed that first impulse, there is still a high chance we get some continuation. Okay, that's when you really start to think like a pro trader. All right. So a little pro tip for you guys: backtest, so that you have these stats in your back pocket. But as I said, I am doing more backtesting. So if there are some of you who are looking to trade full time, looking to quit your 9 to 5, do this properly, definitely hit me up on Discord, and I've got some stuff, for you. All right. Anyways, that was that trade. Juicy trade. Hope you got into that one. Actually, no, the trade was all the way up here. Hope you entered that one because you would have still been in that trade. I'm not going to do the risk to reward because I can't be asked right now. So what did price do next? Well, price then came back down, and it came back down for this level here. So we had high, low, high. Price came all the way back down here. Okay. Now, I'm sure some of you were looking for a trade here to take us all the way up there. All right. And that's completely fine. All right. Because that follows that higher time frame market structure that I've just drawn out. So let's see, was there a confirmation here? Yes, there was. There was a confirmation, but it was a short-lived confirmation. And what do I mean by it was a short-lived confirmation? Well, we're about to find out. Well, price came in here, giving us nice lower lows on the way down, and then it creates this low, retraces, creates another low. As soon as price creates this second low, as soon as it does 1, 2, 3, and this low is not as deep compared to this, what is that screaming to you? That's screaming range. We have a range. Okay. And that's exactly what price has done. Price has created this range, which I'm going to put in a nice little box here. Okay. So if we now look to establish what's going on in this range, we're going to drop time frames to maybe the 5 minute. I wouldn't if you're a beginner trader, I'll stick to maybe the 5 and 10 minute, all right, and see if you can capitalize based off of that. So off this range, we can see we're getting a nice accumulation model, all right. And I was in a bus the other day, actually. Was I in a bus? No, I was driving. I was driving the other day and I thought to myself, why is it called accumulation? Why is it called distribution? And it just clicked. It clicked. Well, accumulation makes sense. Why? Because you accumulate, right? I think I'll explain it the other way. When you distribute stuff, you sell. Okay, so we call it distribution. Like this, this would be a distribution phase for a potential sell. This could be a distribution for potential sell. So when you distribute stuff naturally, right? You distribute. Let's say you're selling apples. When you're selling the apples, you're distributing. You're giving it away, right? So what's going to happen to price? Price is going to drop. Now, if you are accumulating to do what? You are gathering. You are gathering together to buy. You're gathering to buy. So that was something that just sort of dropped into my mind, and I thought this would be useful for you guys who are starting to understand this terminology, accumulation, distribution. All right, so here we have a clear accumulation phase. We have a nice little Wyckoff model one where we have tap number one, we got tap number two, we got tap number three, off we go. All right. Now, rule of three. After tap number three, where do we have a break-in structure? Well, let's see. It looks like we got a break-in structure there. So as soon as we close there, you could look to enter that trade, or you wait for a retracement on this 5 minute zone and you enter that trade. Now, I actually entered this trade today. This is today, right? This definitely looks like today. Yeah. I actually entered this trade today, and I was in decent profits. I was in decent profits. Yeah, I saw that. Price accumulated there. It broke aggressively off of our zone. However, I was not looking at the charts. I think I got into this trade right around here. But I wasn't looking at the charts. And because I wasn't looking at the charts, I didn't see the following. Well, I was aware that we had a supply zone up there. I said, well, if we break market structure here, if we break market structure here, and we also break market structure here, there is a chance we're coming up here. All right. But the only thing that's going to stop us from coming up here is this old supply range. All right. And guess what price did? You can tell I drew this out. And what did price do? Price came up and it got a nice rebound off of that supply range. So if I was actually looking at the charts at the time, right, I would have seen that we had a flip in market structure here. We got a nice flip here. Can we see that? That's a flip on a 3 minute. That is a sign to get the hell out of that trade. Okay, because what does price do after? It retraces and it starts to come all the way back. Now, my only saving grace was the fact that as soon as I got that second break in structure, so I counted this as break number one, break number two, break number three. As soon as we broke structure there was no reason why my stop loss was here. My only saving grace was I moved my stop loss to here. So this became a break even trade. So it just took me out, and that was that. All right. So that was the trade for today. So that's kind of how I see the charts. Um, in the recent, in terms of the recent events. And I guess what's next now is to say, okay, where's the next trade coming from? And how are we looking to capitalize off of these markets? Now, I wish I had more time on my hands. I wish I had more time on my hands because I would love to, trade some more traditional assets. Love to trade gold. I'd love to trade, you know, even I'm quite interested in getting involved with bit of crypto. Trade some of these altcoins. Why? Because hey, if you know what you're doing, you know what Bitcoin's going to do. Obviously, because everything is reliant on Bitcoin when it comes to the crypto world. There's no reason why you can't catch these plays on these altcoins. And when these altcoins move, they move. All right. So you can get a 10% move, a 20% move in a day easily. All right. So I don't know. If I've got more time, I'll definitely maybe do a bit of that. I doubt I will create videos on that because I think it's a lot more risky, and you really have to know what you're doing. And I'm not going to steer you guys in the wrong direction. Bitcoin's smooth. It obeys market structure really nicely. So you stick to Bitcoin. All right. So what's price doing at the moment? Well, price is giving us this weird little range. I don't like it when Bitcoin does this. A weird little range, break structure. It's ranging again, perhaps for another impulse. Okay, but it could be creating a range number one, range number two, and a drop. All right. So basically, I've basically said nothing, right? Because I said price could go up or price could go down, which is fairly obvious. But regardless, we don't care what price is going to do. We don't care because we are just going to plan what the next trades might be. And you guessed it, we have our macro range here. For my micro range, I'm going to quickly look at what the POC is saying or the volume profile is saying. And we can see that, well, we're kind of in the middle of a fixed range pool. And we've got our value area high up there, value area low up there. We've come back to the value area low. We could be rotating, quite a tight range, tight range in terms of the value areas. So that's what that's saying. But as far as this range is going, well, clearly we have our range deviation plays, which are no brainers, right? Price likes to, Bitcoin and most traditional assets. It's weird because obviously these bars you see are based on human interaction, less human interaction these days than it was in the past because now you've got all these algorithms and computer programs entering these trades for these big banks and these high volume players. However, it's still based off of buyers and sellers in the markets. Even though it's computers executing it, it's still based off of a signal that's been programmed by another individual. All right. So in some ways, what you're looking at right now, and this is a bit of a far-fetched statement, what you're looking at is is behavioral psychology in a sense, and human behavior, and just like buyers and sellers in the market. This is basically the human DNA of a fair market. All right, this is what you're looking at. But yeah, that's a little bit far fetched. But anyways, we're looking for deviations at range high and range low. All right, that's there. We're looking for a long there. It goes without saying. Obvious trade. We also know that, well, in premium we're going to short and in discount we're going to long. Why would you sell something that is cheap and why would you buy something that's expensive? All right. So we're looking for longs anywhere here, shorts anywhere there. But the beautiful thing about this is we've also created this blue range that we can see here. So why not look for deviations on that as well? So deviation at the top and deviation at the bottom. So it looks long at the bottom. All right. So just be careful though, because we won't be entering this until we get nice market structure flips. I would say at least on a 10-minute for nice structural flip. So if we just investigate this internal range for now today, let's go at the internal range, drop down to the 12-minute. We can see that our internal range here, we've had tap number one, tap number two, tap number three. We've had this nice little buildup of liquidity here that we've swept. We've swept all of it. I actually didn't see that earlier, but we have swept all of that liquidity. And we swept that coming back into the zone. Now, what we also see here is that we had three taps at the bottom, one, two, three, off we go. We retraced, which meant price came back down for a reason and came back down for something. Now, it may be worth investigating to see what was there. Was there a zone that price came back down for and before it goes up? I don't know. And frankly, I don't have the time for it right now. However, I didn't like the fact price came down here. It was really annoying. Really annoying. Why? Because it completely ruins our risk to reward. Before we can justify a trade entry now, guess what? We have to reclaim that level. Price has to come all the way up. All right. And then we get average. It's just annoying, isn't it? It's just annoying. All right. So we just kind of have to watch that for now because I'm not going to enter until I get a flip because nothing stops price from doing this and then doing that. Okay. If anything, maybe I want to watch here for a short to take that down. All right. So that's what I'm going to be looking out for. Now I'm also going to be saying, all right, well, looking at this internal zone, do we have a supply zone in there? And do we have a demand zone in here? So check out for those regions, see if we've got anything for a nice little trade. Now, remember what I said earlier with the fib tool? You could have also used the fib tool here because I'm not sure if it's the same example, but um, if we take out the fib tool, if we take the tool from that high to this low, what did price do? It just came back to the 786. And then you could enter that short off of the 786 if you followed that confirmation. All right. Um, but that's what I'm looking out for. I'm going to stick to the deviations. Obviously, the internal range plays are not as juicy as the external range plays. If price is to come all the way up there, this could be the short of the year. All right, because I would quite like price to at least touch 100K. I like it to break, at least one more time and head up a bit. But I don't care what it does. If it gives us my entry here, perhaps a flip in market structure on the 30 minutes, 15 to 30 minutes, then I'll short it. Okay, and then we'll go from there. Now there are tinier zones in here. We can look to play this range in here, but not too interested because this week is kind of a busy week for me, so I won't be glued to the charts. And because of that, when I have weeks like this where I know I'm not going to be checking the chart every single day or every single hour of the day, I tend to just take it chill, only look at the bigger plays, the higher probability plays. I kind of forfeit some of the internal scalps that I could get involved in, and I say, well, let me just take the bigger plays. So today, that's what we're gonna do. Before I post this picture, I'm gonna also look inside and see whether we have any zones. I can already see here we do have a supply zone up there, so that's somewhere to watch. So if we extend that across, that's a 3-minute zone. You'd be surprised how often these 3-minute zones work. So we may not make it all the way up there. We may react off that 3-minute zone. Why not? Now, I would also recommend for those of you who I teach, I would recommend, well, have a look at this zone. Is there something that we could get a reaction off of here? That will be a quite nice place for a flip. Okay. And then I would also say, look here, is there something we can find to get a reaction off there? That will make a nice flip for a long. All right. Have a look here as well for the same things, and that's kind of it. That's kind of it. In the off chance that we have price action that breaks out of the range today, which is unlikely, well, leave that range break, wait for the retracement, and follow it up. Okay, and if we break bearishly from the range, so if we start to make our way down here, we'll look for that deviation up there. If we carry on coming down, we'll look for the retracement at this range extreme. Maybe it comes a bit deeper before it drops down. All right, that's kind of how I'm looking to play this. I hope you found this useful. Remember to hit me up, and don't forget to hit the boost, hit the follow on YouTube, and all that jazz. And I will see you guys next time.